Okay, traders, what's going on? Jamie Saettele here. This is the Midweek Strategy webinar with SB Trade Desk on September 1st. Can't believe it's already September 2016. Let me know if you can hear me, just to confirm if you can see the screen, the charts. And once I have confirmation, we'll get started. Trevor says all good. All right, awesome. How are you, Trevor? And everyone else out there. Okay, so three main parts to today's webinar. I'm going to go through, some of the majors. We'll look at a little bit more. I'll look at the dollar, South African rand dollar ZAR report I published yesterday. Maybe there's some questions there. I don't know, but if there are, it's time now to ask them, and we'll try our best to answer them. And then we'll look at some of the analogs specifically that are seem to be at pretty big turning points for some of these dollar pairs. So I don't, just real quick, I don't have like a major dollar bias. I mean, it's more towards the downside than the upside. So like this was the previous dollar chart we had talked about. Thought this was going to be wave two. We ended up getting, if this is the bearish count, we actually ended up getting the flat possibility, right? And all of it was basically from just Jackson Hole, right? This is Friday. So that, is kind of what we're looking at here. I think there's an interesting spot here if you, Leon says, where's the dollar ZAR study published? It's in yesterday's update, the swing update. There's like the first five charts are all dollar rand. There's a bunch of charts. The first five charts from yesterday are kind of dedicated to the dollar rand. Anyway, so you have a parallel here. Again, this is just one touch. But new month, as we've talked about, for a couple weeks now, the seasonal patterns do turn down for the dollar. Okay, after tomorrow. So it's, you got the wind behind your back, I guess, on that one, as far as the seasonals are concerned. But as far as a major strong held conviction, with the dollar, it's more, it's more currency specific. Like the pound looks like a great setup, right? Aussie could end up being a really good setup. Euro also a good setup, but maybe a little, into next week before the big low. Dollar yen actually looks good on the upside as far as dips, although there are big levels there. So let's just get into the charts, okay? All right, we'll do that. So euro, as we know, I'm not going to do too much on the euro here because, I mean, we've talked like ad nauseum about the euro. I've gone through, I don't, how many big reports I've published on the euro as far as the traps and the low volatility and blah, 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 blah. So not going to spend a lot of time there. The big thing here, I think, to pay attention to is just, you got the old trend line tomorrow, okay? The old support line tomorrow, 112.30, 112.45. It's a little closer to 112.50, I guess. So that could be some minor resistance for euro tomorrow. Again, my big picture stuff has not changed. I'm still thinking that we end up with the big move higher. And again, here's that analog that I talked about, the 98 one, right? If this one continues to follow to a T, then your final turn higher is something around September 8th, and then in both the 1998 market and, of course, the big one, 2000, 2002, which is already underway. They can both kind of enter their acceleration phase. Remember, this is the 2000, 2002 one. So it's still in effect, right? It's still so-called working, if you want to term it that. I mean, you're not going to get a day for day uh, move all the time, right? So still bullish here, more or less on dips than chasing. Timing wise, again, NFPs tomorrow. I wouldn't want to be chasing strength. Okay, up here. In fact, you might get resistance up here. Okay, and then do one of these kind of tests of the lows down here at some point next week before we can go higher. So that's pretty much it for euro. Not a lot to write about at this point. Kind of already done all the work there, I think. Dollar Swiss, however, is really interesting, and I think dollar Swiss might be the tell on this, if you will. All right. So I'm going to pull up a dollar Swiss chart. Again, go to the long-term page. For those of you who aren't, familiar with where that is, or if you're new, I'll show you quickly where you want to go to find this information. All right. So first of all, the long-term page here. I made a tutorial a couple weeks ago because I know people had a bunch of new clients had questions on where to even find the information. So this is the long-term page, and it's currency specific, right? So here's like the long-term page with dollar Swiss, okay? Just as an example. So, here's the long-term page. Now, as far as the daily is concerned, we actually have hit a big level just today, and we're reversing, and I think we're probably going to get a J spike. Let me see if the range is large enough, and it is well, fairly big enough. So you've got good, and now you're going to get a J spike here because you have a 20-day high, and dollar Swiss. Here's the daily chart. Okay, so we're going to go all the way back to post or pre SNB, and here's your trend line that was support down here. Okay, off the high. And we just tagged that bad boy to the tick today. So we might have a pretty big top in place for dollar Swiss, right? So, with that, to me, the action, the response at this level is supportive of looking lower in dollar Swiss, and by, kind of relationship, if you will, probably higher in the euro. All right. Now, pound is the one that I'm probably most interested in right now as far as the Europeans go. Right. We have a very solid, well-defined slope going on here. 4-hour chart. Okay, continue to, kind of respect the median line, if you will. You could draw this parallel here as well, right? And we have come off this, this region. So for tomorrow, and again, I think you can see it best on a daily chart. What I'd be looking for is an order to buy cable. The daily chart, you can just draw this trend line, and I would look to buy it at basically the top side of this, which is that high at 31.84. Okay. So there's your pound dollar chart. Okay, this is the biggest thing to pay attention to. Okay, 31.84, real clean. Eventually you could end up getting a move, through up into this, if we continue to follow this parallel, of course, or this slope. I have it drawn like so. All right. Don't have this because I didn't think this is necessarily valid. But, you'd be targeting the upper parallel, which, we'd be talking about, if we're talking about going higher throughout September, which is a distinct possibility, you're talking about 139, or so um, for pound dollar. Now we do know that there are bigger resistance levels before then um, with the British pound, and you can't really see them if unless you're really on the long-term charts, right? And this is the slope just based off the really long-term downward trending line. So we're going 2007 to 2014. Okay, and we have this slope line, which was support back in March, and that's going to put you pretty much, in the region of former highs, after Brexit, right? So talking about just above 135, maybe mid 135s over the next few weeks. Still, we're talking about a pretty decent move. If you can get that 31, let's call it 31.85, 31.90 as support, for pound, then, I wouldn't risk too much really below. I'd probably just risk under 131.20 or so, okay, and be looking for strength. You got a 4-to-1 reward to risk there, even on a conservative estimate, okay. The red line that you see on this chart, 31.63, that's Jackson Hole, okay. So that's where we finished Jackson Hole. I'll note that the British pound is, I think, the only currency to actually take out its. Jackson Hole's right here. What am I talking about? Wasn't it? It was this thing right here. Yeah. So it's really like 32. So that's actually better. Yeah. Hold on. Let me make sure. This is the futures chart. Yeah. Okay. So it's like 32. So that's better. So with Jackson Hole, you would be looking for that level to hold, right? It's the volume level. Just a great reference point. Okay. We came through it. It was not resistance. So you'd be looking for it to provide support on the way to higher levels. So yeah, 132 is just such a big spot for cable. I love it. I think we go higher off of it. At least I like the trade. And the idea. So yeah, don't forget either. We have. What's up, Eileen? How are you? Don't forget either that we've got a record short position for speculators in the British pound. Okay, and we've had that for 5 weeks now, and so you can say that the record short position or record positioning doesn't matter until it matters. And that's, sounds real simplistic, but what I mean by that is it doesn't matter until the market turns, right? Because once it turns, that's when you get, it's kind of like, it's like poking a tiger in a cage, right? Once it turns, right, it gets violent, okay, and the move will start to wash out all of those bad shorts. Okay, that short covering rally, is what drives the big move higher. So there is big time potential in cable. Love it on the upside for a dip. Now, let's look at an analog with cable. This is pretty cool. Pound dollar. So if we're looking at this just on daily close charts, right? You've got this low, so you've got kind of a double bottom possibility, right? Low on the daily closes, we're talking like 129 to 33.50. So you're talking what, 450 pips plus 33.50. You're talking 138 on a target. Okay. I like to also call this kind of it's like people will be looking a lot, they'll see this and they'll want to see another pullback and make a right shoulder. This is kind of when you get the head and shoulders without a shoulder pattern. You had that happen back here in 2012. Sorry, 2015. What am I talking about? The reason I said 2012, I'll tell you in a second. This is a more drawn out version, as you can see. So if we were to, try to scale it, you could get a match there. But the one that actually matches it better to this point is this magenta line, which isn't even pound dollar. This is actually pound yen. This is pound yen from back here in 2012, right? It's a similar pattern from this point onward, right? Where you get this low, okay, rally, two tops and a drop, and then you get a move higher, maybe a minor dip, maybe that happens tomorrow, I don't know, and then you get, off to the races. So again, it's like the head and shoulders, but without a right shoulder, which is a more powerful pattern. So that's what we're looking at here on this pound dollar chart. Okay. So yeah, interesting. Bottom, two tops, right? Rally, pull back, okay, rally. You want to buy dips. That's just all there is to it. Okay. So pound dollar, love it higher on a dip, right? 32 looks like your floor for now. Okay, let's move on. Dollar CAD, not a much to else to share. It's kind of the same thing, right? As what we've talked about over the last couple of updates, and that is this is resistance. Okay, I mean you've got the June high up here, 31.43, I think. Yeah, and that's pretty much today's high, isn't it? 41.47, 31.47. So pretty close. And we've got the June 11th high, or sorry, July 11th high, and then the minor pivots in early August before the breakdown. And funny enough, we're pretty much back to where we were with NFP a month ago. So what we're looking at here, you could you see a broader breakdown here? Look, many possibilities. Okay, but I think that 130 is going to be the floor now. Several reasons for that, of course. One being quite simply that the momentum on this move higher is such that it's not really, counter trend. Okay, typically momentum, if we're just looking at say 4-hour RSI, okay, here's dollar CAD, you're getting this string of overbought levels. That's not necessarily indicative of the beginning of a downtrend. So it could be sideways, it could be up. Now, like here's your pound dollar chart as a consequence, or as a in the opposite situation, you're not making oversold levels on that dip. That's more in line with an uptrend. Okay. Euro making oversold levels. This supports the idea, the analog, that we go test these lows later next week and then go higher. So dollar CAD, I would like it at 130, right? We're coming off here. Nice 4-hour outside reversal, by the way, right here. So look at that 130 level, and this is just a trend line, folks. From the May low to the August low, you're going off this July 4th and July 15th, and that was resistance on the 22nd of August. And we want to see that same level be support in the next couple of days, ideally tomorrow. And you've got horizontal levels there. 29.95 is the Brexit level as well. You've got shorter term slope there. I mean, this is one of those that really kind of lines up nicely for a big hold, right? So if you get a crappy dollar NFP print, or for whatever reason dollar CAD tanks into 130, then look for support at 130. Okay, so you can see as I'm talking about this, like that, how my dollar bias is not really much of a bias, right? I kind of want to buy pound dollar dips. I want to buy dollar CAD dips. So I guess you could look at pound CAD, if that's your thing. I prefer to play it through the dollar pairs. You don't have to be as precise. You give yourself a better shot. Um, Aussie, let's move the whereas we're on the commodity currencies. Aussie, near term, I still think that the 75.80s could be a decent sell, right? Um, you've got good resistance up there from a high, a low, and a very short term slope. Okay. This all it goes back to August, right? So, one more low in this pattern would complete a sequence, I think. And Aussie could be one of the better trades on the long side after you get another low. Okay. Two levels to watch, of course, as noted last night. Basically 74, 65, 70 is going to be a level, so just a new low. Ultimately, though, I do feel like the 73.80s is going to be really your sweet spot to get long on Aussie. At least that's where I'd be really looking at getting long Aussie dollar again. Uh, the analog with the 2001-2 low is right here as well, right? And the shape's a little different as far as the extent of the move now compared to then. Okay, but the timing between the highs on the scale is really quite similar, right? High, high, low, nothing really here, kind of inversion actually, high, and then the next low would basically be next week, okay, in 2 to 3 weeks. Okay, so 73.80 is so big because you've got the 200-day average there. It's not shown here, but it's there. And then you've got the highs from last October and last December at that same level. Okay, so pay attention to that. Moving along, Kiwi, I don't really want to spend too much time here. Kiwi hasn't done anything since the reversal last week. It's just been steady, right? It's acting actually pretty strong. There's nothing worse than being in a market that's not really doing anything, right? It's like if you're going to be in a trade, I'd like to know at least if I'm wrong. So if it's not going to go lower, then at least stop me out quickly so I can, move on. And in this case, Kiwi's not doing, it's just sitting here, right? So I put out that really short-term chart this morning on the head and shoulders, the inverse head and shoulders that we've just completed. So you can see here what you would get if you took that target is you would get a target of 70, I think it's the 73.20s. Yeah, 73.25 happens to be highs up here anyway. Okay, it's the high from over here in July. So, who knows? Maybe 73.25 is the sweet spot as far as a short position is concerned. I don't know. Good time, I guess, to look at a few more of these analogs for the commodity currencies, right? So here's the Aussie one. Here's the Kiwi one. Right? If we're going from the weekly, from the lows, maybe you get a high next week, right? It would be the same amount of time, 53 weeks, right? This was 53 weeks from July to July. This would be 53 weeks from August to September. I kind of thought a high was in because the end of the pattern matched so well, right? Here's what happens when you do just the match with the end of the pattern, right? You got the high on the same day, actually, right? The 24th, okay? And of course, as you know, the 24th was the low last year. So it's just, this, if you can see here, there's the low on the 24th, okay? Closing low on the 24th, high on the 26th. So, splitting hairs here kind of with Kiwi, but the idea is the same. I think that there's potential for something to turn down hard. But again, I'm not going to sit here and fight a market that's just sitting there / drifting higher. Eventually, this might be something to play. Might even work out with Aussie Kiwi again. We'll, wait and bide our time. That's Kiwi. That's pretty much it as far as the majors. How about some crosses? with my interest in pound right now, I guess it makes sense to take a look at some of the pound crosses. If we take a look at, say, euro pound, remember I wrote last week that I liked outperformance on the pound versus the euro until 84, with the reason being, the reason being that that's where the slope was, right? Today's low is hit it. It's 83.87. We've bounced. And if pound is going to come in a bit to say 132, which is again the level I'd be looking at buying it if we got that tomorrow. If pound's going to come in some, then you want to see, support at 32, which, we got 33.20 today. So if you come off 100 and 20 pips from that high, you probably get a bit of a rebound in euro pound, assuming euro holds steady. Here's the 240-minute chart. You can count a 5 waver on here: 1, 2, 3, 4, 5. Okay, so you should probably expect some sort of a rebound anyway from this level. And be looking maybe at resistance up here anyway, right? So maybe 85.70. I don't know. As far as a trade itself, the pattern here, this is something you could maybe look at trading on the short side if it plays out right. At the moment, I still like playing the dollar crosses better as far as expressing opinions on pound dollar and pound yen, which we'll look at right now. Pound yen, so we got out of the long right here, okay, and we've continued higher. Not really, don't really care too much about that, to be honest. I know some people get annoyed when the market goes, they get out of a trade, the market keeps going in their direction. I don't really care. I have a plan here, and that's to get back in on the weakness, which we will get at some point. I don't know if it comes tomorrow or next week. It might be next week. Might be able to get back in near where we got out / a little lower, 135.50 maybe. We'll see. As you can see from this chart, the big resistance for pound yen is probably not until close to 140. Okay. Now, I don't know if we go there or if we pull back first. If we pull back first, the level to look for support. It's, as is wrote about yesterday, it's really the former resistance line, which, would be about 136.50 or so tomorrow. But this is a good time to actually do a little slope lesson for pitchforks. All right, so you see I have this drawn here. This is a pretty steep slope, right? I mean, it rides up here. You have no idea if this is valid yet. Okay. Sometimes it's best to draw maybe off the secondary high. Here's where this gets interesting. So we have obviously responded to this level. Okay. What this level is, by the way, is simply 25% within this entire thing, right? So, 25% in this quadrant, 50%, 75%, 100%. So you can call it the 25 line if you want. It's obviously responded to it. The high today was right at it at 138. We are currently, 137 and change. So we have pulled off this a bit. Nothing to write home about. But if we do, pull off of this, be looking for support, on basically on this slope line as well, which essentially is actually, the former resistance line here anyway. Okay. Now here's an example of pound yen back in 2012, which is kind of the same idea. All right. All right. So here was pound yen back in 2012. So you had these two lows. Okay. The market rallies, hits the 25 line. Okay. You get a pullback. Your pullback doesn't. Notice I'm not saying that the pullback is going to go all the way back to the lower parallel. We don't know if that's going to happen. We don't even know if this is right to use yet, right? But the fact that you did respond so well today to this 25 line tells me that you should probably at least watch it. Okay, you should be aware of it. So in this case, you ended up getting, support. You basically had a prior price support hold there. Okay, nice outside day here for trigger on the upside. It actually ended up going to the next, midpoint line between this, if you will, the 75 line. All right. So we'll be watching here. What you're watching for is to see if the market's responding to this angle. In this case, we already know that it did. Okay. So this could be something that we're playing for a while. That's my point. The best example, by the way, of hold on. The best example, by the way, of a slope working like this is gold. Or you remember gold earlier this year? All right. So gold, I know there's a lot on here. Apologize for that. But early on this year, you could have drawn, and we did this in real time, right? This is not a Monday morning quarterback thing. Some of you might remember this. Early in the year, we had noticed that this fork, just a couple days after the low, you were actually responding to, again, the 25 line. In this case, you actually did trade all between the 25 and the parallel. And then the big tell was that once you broke through it, you ended up getting support at that same level. Okay. And that's when you really went to the upside. So, I mean, that's kind of the best case scenario as far as getting a 25 line like that where you hit it in resistance and then later on it becomes support, right? That's kind of the best case scenario because you really can put on a good size with that type of trade. That's what we'll be watching for though. With pound yen, maybe is something similar, and dollar yen. We'll look at that in this manner too. Also, look at how on this gold chart, by the way, might as well pay attention here to gold moving forward. We're getting really close to some pretty big price points. Okay, you have this line, right? Talk about the midpoint lines. You have the 25 line, the median line, the 75 line, which was support on Brexit. Might get support there again. Okay, and if we do, it might be in line with the former high here at, what's this, from March, 1284. That'd be a big area to watch, okay, for gold. And if, again, with yen positions, you're going to want to know about this this level, because as gold makes bigger moves, you'll probably get moves in yen with it. We've showed the relationships with yen and whatnot a bunch, right? So yeah, that's what we're looking at with gold. Silver, by the way, the gold silver ratio is turned down pretty solid. Silver, you can see here, the median line in silver, very clean. And you've got that silver median line right here too. So silver might be on its way to the races here fairly soon as well. Okay. So big support for the metals coming up, it seems, over the next maybe week or so. Let's move on to the dollar rand report. Okay. So some of you, I'm sure, have read the stuff here from the dollar rand report from yesterday. If you haven't, then you'll hear all about it right now. All right, let's go to okay. Dollar rand. All right. So, what I thought was super interesting with dollar rand, the topping process that you're getting is really similar 2001, 2008, especially 2001, and we'll look at it. I guess it's kind of cocky of me to say the topping process because we really don't know if it's a top yet, but it may very well be. Okay, and I'm going to lay out all your reasons. So, first of all, 2001 and 2008, you're looking at yearly closes here. Obviously, you're probably not going to trade on a yearly close unless you are just a long-term investor. But stuff like this really puts it in perspective, okay? 2008, 2001 turns. Okay, great. 7 years apart, 7 years from 2008 to 2015. That's cool too. Where this gets interesting is that if you work backwards in 7 years, 1994, nothing really there. Okay. 87, that was a low. 80, that was a low. 73, that was a low. Since the end of Bretton Woods, okay, right here, 1971, you have basically had a straight trend higher in the dollar South African rand exchange rate, with the biggest turns being in 2001 and 2008, 7 years apart, 7 years apart, 7 years apart, 3 lows during the big run-up. You might end up having the 3 lows, nothing, 3 highs. The symmetry is beautiful. The wave structure is there. 1, 2, 3, 4, 5. How about A, B? How about a C wave? Okay, how about that? That would be wonderful. So there's this long-term cycle thing to think about. We could be really on the cusp of, a significant turn in history. Let's move on then and look at the individual tops. So there's actually a way to trade blow-off moves, okay? Markets will stay contained within a channel, right? We know that markets channel. That's the whole idea of, trend lines and slope analysis and everything. Markets will respond to angles. They'll trade within these angles, right? Well, if you're trading in an upward sloping channel, a market, once it breaks out of the top of that channel, you're now what you would call kind of, you're in blow off territory. Okay. The market's, it's in a blow off, mode, right? And how long that blow off goes for is, kind of anyone's guess. But at the time, when it happens, if you have, a decent amount of experience, you can kind of understand that it's happening at that time because it's just completely insane, and you're just kind of look at the screen, you want to say wow or throw up or something, and it's crazy. Well, once it reverses, okay, fine. Really, the trade, in my opinion, the way I look at this is that once you come back into the channel, your working assumption at that point is that the blow off is over, right? And that the market's headed back to where the blow off started or the origin of it, which I like to define as really the last point at which you hit the trend line support. Okay, so in this case, back in the case of the 2002 top, it would be all the way down here. Okay, in the case of the top in 2008, which is really a much smaller version, it would be here. Okay, in the case of now, it would be down at 10.9. Okay, so you're talking about a pretty big decline from 15, to not quite 10, right? You're talking about 4 over 15. So you're talking about a big drop. Let's look at the structure of each blow off, rally slash reversal. So here is the 2001 period, 2002 period. Okay, you have a decline in 3 waves, right? You have a rally in 3 waves. Market resumes going lower. Okay, let's even look at the 2008 high in decline. Okay, which was here. You had a decline in 3 waves. You had a rally in 3 waves, and then the decline really started. I don't think it's crazy to think that you could have something similar happen here. In fact, it's already happening. Decline in 3 waves. And how about a rally in 3 waves? Can I get that? We've already got A. Can we get B? And then get a C? So this could play out through most of September. But it's what I'm watching for. So, we're at resistance right now. Okay. Again, if you look at this channel that's going back that defined the entire rally from the 2011 low, okay, it was resistance. It actually ended up being support back here, right? In April. It was support again before you broke down, and we just hit it again. Now I'm guessing it's resistance. Okay, so there is the possibility of a short here. Again, I'm not telling you to go short in front of NFPs, especially something like dollar rand. I know a lot of you probably haven't traded dollar rand before, and you got to understand the spreads on this. Okay, first of all, understand what a pip is. A pip here is 1 divided by 14, 1 divided by the exchange rate. So it's worth, not even a penny, okay, on 10K. It's a very small, pip value. So when you see this thing moves, say 1,000 pips in a day or whatever it is, okay, it's really 1,000 divided by 15. It's not 1,000 pips. Okay, so there's that. But the spreads can really blow out big time. So the spread right now on this is 36. Okay, it's 36 though. It's actually more like 2 because it's 36 divided by 15. Okay, so it's like $2 pips. That's actually pretty good. But when you get to rollover, the spread on this will blow out to like 400 or 500. So this is not something you want to be aware of. Good thing here is that if you're short here, you can collect rolls. So really you're earning interest to be in the trade. There's a few questions I'll look at here. Leon saying, you think it's unlikely $0 will approach last year's high? Yeah, I mean, this is the setup, right? You don't want to use these setups to predict macro events. you want to use them to trade. So like I'm looking to be short here. Okay. And yeah, I think it speaks to a more of a dollar weakness scenario. But again, you want to play each pair on its own merits, each chart on its own, its own chart. Um, Obviously, the most famous example of a blow off move is going to be the stock market 1929 top, right? Let's see, do I have that on here? Do I have it drawn on this one? Which one do I have this drawn on? I don't have it on here. Eileen's actually asking a question. She says, so it's unlikely dollar, or no, wait, that's, sorry, that's Leon. Eileen's, I didn't know about blow off thing. Does this happen in regular pairs then too, or only those like long term? Well, so it can happen in anything, right? But you just have to have you have to have the conditions there for it to happen though. So, man, I did these charts yesterday and now I can't find the thing. Oh, here we go. I got it. Okay, so here's the example in 1929, right? So you have the channel, the market goes outside of the channel in 1927, and you really have like 2 years of blow off. Okay, market comes back in the channel, blow off's over. Okay, rally, decline, rally. Market breaks the channel. Now it's really over. Market breaks the channel and tests the former channel as resistance. Your target is really the last where it touched the channel last as support, which is all the way down here. And there you go. You get the Great Depression. So yeah, this is something that you want to see a long channel occur. You want to see the market extend through the top. You want to see it come back in. Once all those conditions are met, you have the conditions in place for a blow off top and really a complete retracement of the entire bubble, if you will. I mean, we had that happen with pound yen, for example. Okay, so if I show you here, this happened with pound yen. Here's a daily chart of pound yen going all the way back. Here was the pitchfork, if you will, right? And this was essentially the channel. You went up through it. You had, a top that ended up being with a space on top, which is your divergence. And we erased that and a lot more. So yeah, it's not like this happens all the time. It's a pretty rare thing. But I, wanted to make you aware of the dollar rand opportunity. Leon with another question asking about could make Dzar yen. Yeah, it's funny you say that actually. So, to me the yen's such a wild card, but yeah, it could. In fact, so if we look at, it looks like I only have rand yen data from 1998, although I could obviously make it because all you need to do is take the dollar rand and dollar yen exchange rates and then make the cross. But let's say that if you have, this is rand yen, yeah. I mean, you essentially could have a giant wedge here, okay, an ending diagonal, if you will. Got to look at it on a log chart, I think. So here's the log chart. And yeah, you could, Leon, you could have a big time bottom unfolding here. Absolutely. It personally, if this were something that's going to happen, I think from a trade setup standpoint, I mean, here's the daily chart. You have an impulsive rally here. 1, 2, 3, 4, 5, right? We could be making something of a head and shoulders pattern, right? Just kind of saying, right? You've got the kind of your head here, right? So you could see, a significant appreciation in this cross. I'd say by looking at both of the crosses, dollar yen and dollar rand, they both look like this would be a very possible outcome. I would lean towards kind of trading dollar yen on the long side and dollar rand on the short side, from this point on, I guess. If we look at both of these as we did throughout the webinar, right? You say dollar yen probably has, if we have turned the corner in dollar yen, let's look at dollar yen again just real quickly. Oh yeah, I wanted to do the same thing that I did with pound yen and whatnot. Okay, so we've come into 104, area that we thought might be resistance anyway, and we've come off a little bit, so we're unchanged here today. If we have made a big low, which I think we have, right? I've written about that in the long-term page with talking about the 5-year average and everything else. If we've made a big low, gonna make this shit clean. All right, let's get rid of all this crap. All right, if we have made a low, then your slope that you're trading on could possibly be something like this. All right. All right, so that is right there in line. That's nice. And then what I like the best about this is right here. Okay. High crosses the low. Remember, our breakout level was this. It was 102.26, 102.65. All right. You might end up getting resistance up here. We're already kind of at resistance, as we've said, 104. You do have a trend line here too, by the way. Okay. I guess you could draw it here, but that's kind of cheating, in my opinion. So I'm drawing it here. So yeah, this is your breakout zone, and something where if we've really broken out in dollar yen, we've really turned the corner. A test down here of this, but a hold, right? So you get a nasty drop. Market holds on the daily close, wicks everyone out. It would be a nice way to do it, and we go higher. Bottom line is, I like dollar yen higher. Pretty clear on that. All right. I am pretty much finito here on my information for today, at least. I could actually go on for probably days, but got to save something, right? No, seriously. There's a lot of really interesting stuff right now. The S&P, for example, like here. Let's just do this. This is fun. So the S&P 500. This is pretty interesting. You know that if you look at a chart of the stock market, Here's a chart of the Dow. We're going back like 100 years, right? You got to be a pretty bad trader if you let's say that you could like you had no, let's say someone traded this entire period, like 100 years, right? And they actually lost a lot of money, right? The market more or less went up for the whole, most of the time. So what's interesting is that here's a strategy. If you were just to buy at the beginning of September every year and close, this is what your equity curve would look like. What I'm saying is that September is actually a negative year. Over 85 years, there have been 50 down years and 35 up years. That's pretty crazy, right? Just to think how negative the stock market is historically in September, okay? So there's a big seasonal headwind for the equity markets here. Oops. So it's something to think about. That does not mean the market has to go down, right? There have been, in 85 years, there have been 35 up years. But it's something to be aware of, especially with the stuff I published last week about the timing and all that stuff on the S&P. So that's fun. There's also crude oil is seasonally pretty bad. This is one of the worst months of the year for crude as well. And we're starting off on a pretty bad note. Crude's already down 3% today. So that, I think goes hand in hand as well, by the way, with the idea that this is the right dollar CAD thing to follow. Okay, right here. We get a dip to 130, I buy it, and we go higher for a while, and then we top. Okay, and if we look at crude oil now, what's crude oil doing? Looks pretty bad, doesn't it? You got everyone talking about this head and shoulders pattern, and people love talking about it before it happens, but here we go. But what's happening then is, this is the steep slope Mike's been showing, I know that. You could still have a head and shoulders pattern, by the way back here. But you might have a little bit of time in the shoulder, right? So what I'd be looking at here probably would be, I know this is messy, but I'd probably be looking actually at this point for a move down, potentially all the way down to 37 and change. Maybe 37 and change at some point towards the end of this month. Yeah, that's what we're looking at, right? I don't know if you get if you're going to get a bounce, 43 is a good area to do it. I'd call 43 kind of your minor support. I wouldn't call it really major. I would call it minor. Yeah, so eventually this is going to bottom. You're going to get a big rally. Let's look at last chart, I swear, and then I'm really going to end it because I got a bunch of other stuff I got to get done. So the period right now, a lot of people are comparing crude oil in the bottoming process to back here. I think you actually we're going to look more like this. Okay. And obviously the time's different. This is more compressed. Okay. But let's just consider price action from March of 2015, right? You had a big drop. What happened here in 1990, 1991? Big drop. You had a rally, a drop, and a rally, and a drop, right? Rally, drop, rally, drop. Okay, big rally, another big rally. And then what happened? The market basically did here the same thing that it did over here. So I'm thinking that you're probably going to have that happen. That might happen again. So check this out. If we draw this, and I'm going to make a copy of that, and I'm going to mirror it. Mirror. Wait, do you mirror it and flip it? No, that doesn't make any sense. Just make it a, I guess, mirror it, right? So yeah, okay. So then you get the rally, the decline. Let's see. Hold on. Actually, this would be a lot easier to do this way. All right. So let's take the from the low here, and we'll go forward in time. All right. So what we're going to do is we're going to see if we can get some sort of a relationship between these things. Okay, so you have your, obviously you can see that this one's going to be a lot more, there we go. All right, this one's a lot more compressed, right? We've got a lot more movement, a lot faster trends going on. So it's probably not quite to that degree compressed, right? But maybe it's something more like this. We're going from this low, and that's starting to look a little more similar, right? So the point being here is that you probably have a number of weeks, so into the next month, of good, sideways to downside action before you can get a much bigger rip to the upside. Okay. In other words, we're just saying that expect more, building of the right shoulder before this market can try to move higher. Okay, in crude oil. That's all I'm saying. And it fits well with the idea that we get back into the 37s before we really take off. Finally, I didn't want to forget this. Dollar MEX. Remember, we are repeating 2014 at this point. So we should be expecting a top right here. Okay, if we're going to get a big drop, then it's about time for dollar MEX to roll over. Okay, so just be aware of that. And now I'm wrapping it up. Okay, so everyone have a great day. I know that I went through a ton of information and that it might be just a lot to deal with. But the idea here is that I present it. I try to present it again in the swing updates. I try to take advantage of it, with trade ideas that are based on these, so that we can not only learn but also maybe have a good time doing it. Okay, so thank you guys and gals. Have a great weekend. If you're in the U.S., happy Labor Day. Have a good, long holiday weekend. September, pretty excited for how it's shaping up with the, September's historically a pretty good trading month as far as volatility is concerned. So let's hit it hard. Let's hit it hard this month, right? I'll get this up and, recorded and archived so you guys can watch it. But again, thank you for attending, and everyone have a great, great rest of your week, NFP Friday and weekend. All right, bye-bye.